Confidentiality, Section 114. A professional accountant shall comply with the principle of confidentiality, which requires an accountant to have respect to confidentiality of information acquired as a result of professional and employment relationship. So, the 2 points. It's want to respect. What do you want to respect? You need to respect. What you want to respect is information. What information? Confidential information. Result of professional and employment relationship. Through professional and employment, you had some information that should be protected by you. You should protect the information. You can't leak all the information. That's it. Be allowed to be responsible in independent disclosure, including a social culture and particular in close business associate or immediate of close friend members. So what they are saying is you need to be careful for with social environment. Who are the social environment? Close friends, family, them, whoever with them. You should be very careful. You can't disclose this information to outsiders. So this has been said. Maintain confidential information within the firms and employing organization. So when you are being employing within the firm and employing organization, for example, you may be employed in a firm. In that firm you get a information with the employees. That is, with the employee, you have a client. From that client you get the information. This does not, you need to give all the information to your employees. That is client protection. You need to protect all the information. At the same time, when you are under employment some other person, what are the information being said given to you, you can't share that to others. Maintain confidentiality of information disclosed for prospective clients and employee organization. Non-disclosure confidential information acquired as a result of professional and employment relationships outside the firms and employing organization without proper specific authority, unless a legal and professional duty right to disclose. So there should be a non-disclosure need to be signed by the employer and employee. You should by non-disclosure, because you should not sell anything to other person. Not to use confidential information as a result of professional employment relationship for the personal advantages of the accountant or advantage of the third party. The information which you procure while doing audit, you can't use the personal benefits or for a benefit of other person. Not to use or disclose any confidential information either acquired or received as a result of professional employment relationship after relation has been ended. Even though after the employment has been ended, you can't disclose such information to someone which is being acquired during the process of this employment. Take reasonable steps to ensure that personnel under the accountant control and individual from whose advice or assistance are obtained respect the accountant duty of confidentiality. Take responsible steps to ensure that personally under the accountant control and individual from whom the advice and assistance are obtained respect the accountant's duty of confidentiality. Sometimes when you are doing an audit, the accountant will tell everything. Okay, accountant will clarify every information you require, but the point is such information which is given by the accountant should not be we should protect his confidentiality. We can go that your accountant said everything, so that only I'm disclosing. You should not break the confidentiality of the accountant. From where you get the information, you should protect the information. The confidential serves the public interest because it facilitates a free flow of information from the professional accountant, client, or employee organization to accountant in the knowledge that is information will not be disclosed to the third party. Nevertheless, following influence of professional accountant or the might require confidential information, such a disclosure might be appropriate. Okay. Disclosure by law. If any confidential information which is for the client, even though it's confidentiality, the government says you need to disclose, you need to disclose. The productivity of the documents or other provision of evidence of a course of legal proceedings. In the case of legal proceedings, you need to provide. If they ask for any document and evidence, you need to submit. Disclosure appropriate public authority of infringements of law that comes to light. If you come to light, the client is doing some bad shady business and it is infringement of the law, infringement of law, then such detail need to be disclosed. Disclosure permitted by law is authority by the client or employing organization. Permitted by law is authorized by the client. Sometimes the company will say you go to that office, you disclosed all the information and it is permitted and is approved by the organization, you can disclose that information. Until and unless that is authorization is given by them, you can't disclose. That's a professional duty or right to disclose when not prohibited by law. To comply with the peer review and quality review. In certain points, you don't need someone's permission, but you need the professional duty to disclose when the peer review, quality review of the institute. When a CA institute comes up with the peer review, quality review, you should disclose every information. There's no going back. You should say everything. To respond to an inquiry or investigation by the professional and regulatory body. If ICAR or a regulatory authority asks for your opinion, how you have came to this opinion, if you need to respond to that information, you can disclose that information. To protect the professional interest of the professional accountant in legal proceeding. In the case of a legal proceeding, you need to protect yourself and your fellow beings. In the case, you can disclose the information to comply with technical and professional standards, including ethical requirement. Sometimes to comply with ethical standards, that complying is the ethics board will say, if in this case of this circumstances, in this circumstances arise and the government or regulatory body asks for the information, if this comes up as a professional ethical body of ethical duty to comply with this. So what are the 3 points you need is comply. Who you need to comply to ethics board and to peer department. Second is respond. So you need to respond for professional body. And to protect when you want to protect your professional CA. So accountant you need to protect, you need to do these 3 conditions. You need to do. Other things not required. To decide whether and disclose confidential information, professional accountants would consider the following points: whether the interest of the party, including a third party of the interest, might be affected, would be harmed if the clients and employing organization consent to disclose information of the professional accountant. To decide whether the disclosure confidential information, professional accountant should consider the following points. When you want to disclose, you need to consider these points. That is, whether the interest of any party, including third party, whether those interests might be affected, could harm if the client or employing organization concerned to disclose of information by the professional accountant. So, whose are the interests being affected, and who are the third party who is interested in that would be affected, and who are the clients who be affected. Want to see the affecting part, firm and the clients who are being done. Everything need to be analyzed before doing this. Okay. Whenever all the relevant information is known as substantiated to the extent in this practice, whether all the relevant information is known and substantiated and extent it is practicable. So even though you're going to use some information, you should see it is a practically you can you see it is and all the information you have gathered. Without gathering proper information, you can't disclose. Proposed type of communication, to whom it is addressed. The 2 words, communication and 2 meters. If it is addressed to you, specifically to you to disclose. First point. Second point is proposed type of communication. What kind of communication they have given, rather orally or into a formal application, or we want to attach some documents along with it. What kind of communication they are expecting, that you should definitely see. Without seeing the communication type, you should not go forward. That's the point. Whether the parties to whom communication is addressed or appropriate recipient. Sometimes even though some organization, income tax department may give notice to you and ask to clarify the information, whether or only if you sign this audit report of that company and the income tax asked for the relevant documents, what is appropriate documents evidence on the basis of your opinion, then you can send. If example you are a partner in a firm, you're a partner, on behalf of a partner you sign this form, sign the audit report, and it is addressed to you, your signature you need to respond. But your partner has signed the report and you receive the notice, it doesn't say anything, you don't need to communicate, because even though you are responsible, of the partner's signature in a form, but the sole responsibility of sign is your partner. He should respond to it rather than you. A professional accountant shall continue to comply with the principle of confidentiality even after the end of relationship. So the relationship of confidentiality moves till the end. The ocean, the sea, the ship never reaches any seas. The confidential information you should carry on with you. You can't share with anyone even after you get away from the port. You can't share with anyone. Between the accountant and the client or employing organization, from the accountant who you work with, data you communicated, and the client which you client, and the employing organization which organization you worked on. There are three things everywhere, the same thing. By changing the employment or acquiring new client, the accountant is entitled to use prior experience but shall not use or disclose any confidentiality information acquired or received as a result of professional employment relationship. You work in a firm, after that you resign and take a new employment. That is not, after that too you can't disclose that information. That is, even after your employment you can use the prior experience, but you can't use the information or disclose such information which you have seen in the prior audit, and you can't share that to other person. That's the thing. This is all part of this confidentiality. The main concept of confidentiality, you should comply with it. You should not disclose something. You should protect the information. You respond to the proper authority. You should not disclose this information to other person. You should protect the information, and even though due to new employment you can't share this with other one. You can use that experience. You should, when you are responding to it, you should see whom it is addressing, how it is being communicated, whom you are communicating about, on whom behalf you are communicating, whether the information it's relevant and it is practically possible to have all the information. Without that you don't communicate such thing and don't blabber. Professional behavior, section 115. What is kind of professional behavior? You don't have a professional behavior, some medicine can learn. So what is this professional behavior we want to see? The professional accountant shall comply with the principle of professional behavior, which requires accountant to comply with relevant laws and regulation to avoid contact that accountant should know about the discreet of the profession. Contact. Avoid any contact that accountant knows or should know must discreet in profession. The conduct that might discreet the profession includes conduct of reasonable and informed third party would be like to conclude adversely affect good reputation of the profession. And the professional accountant shall not knowingly engage into an employment occupation activities that impairs or he might impair the integrity, objectivity, good reputation of the profession as a result of incompatible with the fundamental principle. What is conduct? So the professional behavior is all on the behavior and the conduct. What is the conduct? செயற்கைன்னு சொல்லுவாங்க in Tamil. So even though you are being chartered accountant, you can knowingly go and engage in some illegal activities, knowingly go and deal with black money, knowingly go and deal with cooking of books, knowingly go and deal with some activities which is forbidden by the law. If this will brings about discourage to our profession. Such activity will reduce our reputation and it will integrity or a good reputation. Such things are the conduct which we should forbid to do it. In promoting himself and his work, professional accountant shall not bring the profession into disrepute. Professional accountant is required to conduct his affairs in a manner that remains outside the boundaries of professional and other misconducts. A professional accountant should be honest and truthful, should not make exaggeration claims of service that they offers and qualification they possess and experience they have gained. And disparaging references and substantial comparison of works of others or any direct indirect measure to advertise or professional facts that are violating of advertising guidance issued by the Council of India from time to time. So these 3 points. What they're saying is you should be as you are professional, you can advertise but within the guidelines that issued by the council. First point. Second thing, you can't exaggerate that I have this much experience, I have this much qualification, I can do you this much, and you should not compare yourself with other auditors. Your work you do, you should not. Comparison is not a thing. You do your work, he do his work. There is no comparison. Do your work as if you can. That's it. And you can't exaggerate like I have this much qualification, CA, CS, CMA, CPA. It's not exaggeration, it's no point. You comply with the duty, follow the rules and regulation, and comply with the accounting standard, complete the audit. That's it. So this has been the main point has been said here. Now, public accountant should ensure that the content of advertisements are true to the best of his knowledge and belief, and a conformity of all the advertisement guidance, and aware of the institute does not own any responsibility whatsoever for such contents or claims of him. Whenever its professional accountant is in doubt about whether a form of processed advertising appropriate, accountant is encouraged to consult with ethical standards boards of ICA. So if you are advertising something and you exaggerate something, the institute is not responsible for your exaggeration, and the institute may take action against you, and you can advertise only within the guidelines issued by the ICAI. And the professional account is in a doubt about whether the form of proposed advertisement is appropriate, and then if they don't know how to advertise, they can go to the ethical standard board of ICA, consult with them whether can I post this advertisement, and if they approve, you can post it. A professional accountant shall comply with each of the fundamental principles. So professional accountant should follow each and every fundamental principle. The fundamental principles of ethics established in the standard of behavior expected of professional accountants. The standard of behavior, what is expected, is high. You should be as a professional expert. The conceptual framework established the approach which is accountant is required to apply to assist to complying with the fundamental principle. The fundamental principle, you need to follow all the fundamental principles and you need to comply with it. You should have a professional behavior expected of it. That's it. The professional accountant might face a situation in which complying with one fundamental principle conflict with the complying with one or more fundamental principles. In such situation, the accountant might consider consulting with other within the firm employing organization, those charged with governance, the institute, and legal counsel. So, if you have in a situation and you have doubt of the fundamental principle and conflict with it, there's a doubt. One or more fundamental principles. One fundamental principle says you should need to comply with this integrity, you should not disclose such things, you need to properly communicate with this, and you have a problem. Where can you go? First, in your organization within the firm, you can go and consult with them. Okay, if you able to solve it, okay. No, those who charge with governance, what is that? For the income tax department is asking you to respond to it, then you can go to a responsible person, the directors. You go, they are asking for this notice, I need to reply. What is your opinion over it? Can I give it? And this is my integrity, as my profession say, I need to disclose this. What is your opinion? And that's not solved, then go to institute, ask the management, this is a problem they have, I have this much data, and can I disclose information? The institute, okay, we don't know it. Then go to legal counsel, consult the lawyer, okay, this is a problem, how can I issue? These are the ways you should do. Other than them, you can't go and ask any other person, okay. However, such consultation does not relieve the accountant from the responsibility of exercising professional judgment. Even though you form an opinion and you write the opinion, it doesn't get you out of your professional judgment to resolve the conflict. You are solely responsible for whatever the decision you take it. If necessary, unless prohibited by law and regulation, disassociate from the matter, creating conflict. So even you create some disagreement, just get out of the audit, or if it create disgrace to your profession, don't do it. The professional accountant is encouraged to document the substance of the issues and detail of such a discussion made and rationalize that decision. What do the professional accountant do? They need to have books. How they have the books is document everything. What is the issue? And that issue, what is the detail of discussion? What are the discussion you have made? And out of the detail, what is the discussion value you get out of it? What is the decision you get out of the discussion? That is some decisions. Then how you rationalize the decisions. So what is the issue? What is the detail of the video? And out of the detail, what is it? What you would have discussed? What is your final result? These are 4 things you need to know. So in this book of accountants, you should have this. You should form like this. What is the issue? of this issue, how you got, what's the details you have, details, I have these details, and this what's the reason. Then you have discussed whom you have discussed, what is the person discussed, and what is the conclusion you get. You should have that. Then after, what is the rationalize it, how you understand it, how you going to apply it, have you, which is from which decision you have taken it. That's all the details you have clearly been mentioned this. So by this way you can do it. Thread, evolution, thread and safeguards. These are the four concepts, thread, evolution, thread and safeguards. The concept framework for a specific approach of professional accountant to identify a thread to comply with the professional fundamental principle, evaluate the thread and identify it, address the threat by eliminating and reducing it to acceptable level. So this is the main thing. The second main thing is you're going to see thread. First, what are you going to see? Identify it. After identifying it, you want to evaluate it. The second is you want to address this. And why you need to address it? To reduce the acceptable low level. To acceptable low level. So this is the thing about thread. So what are the different kind of threads you're going to see? A thread in compliance with the fundamental principles fall into one or more of the following category. Threads is self-interest thread, self-review thread, advocacy thread, familiarity thread, intimation thread. Self-interest thread. This thread is financial other interest which inappropriately influence a professional accountant judgment and behavior. Self-interest is you need money, and by doing this audit they give more money, you need to sign. Due to the financial threat and interest, because you have a shares in that company, if you report it like this, your share price will fall, or your father-in-law has shares in that company, his contract will go up. If you are doing bank audit, your mother-in-law have a loan in it, is NPA. If you disclose that your mother-in-law had conflict with you, no, such kind of threat is familiarity threats and the self-interest threat. First threat, self-review threat. A threat the professional accountant will not appropriately evaluate the result of previous judgment made or activity performed by the accountant or another individual within the accounting firm, employee, organization, which is the accountant will rely on when forming judgment as a part of performing current activity. Self-review threat. When you review your work, you may not appropriately evaluate your judgment. That is one. So when you are judging something, you are not evaluating properly. That is a problem. The accountant and other individual within the accounting firms and employee organization, who maybe you or the other person who is evaluating it, you believe on that person and you rely on the information given as judgment and you make a judgment out of it. That is the self-review threat. Yeah, when you wholly depend on someone else. Example, in your office there is a firm. In that firm you have accountant or a junior or an individual who you have employed. He is doing the work, you seeing the work, you signing the work, and you making some judgment, you are complying with it, not making proper judgment and signing it. That kind of self-review threat. Advocacy threat. It is a threat of professional accountant will promote a client or employing an organization position to the point that accountant objectivity is compromised. Promote a client or employee organization. Threat that professional accountant will promote. Professional accountant will promote a client, okay, or employing organization position to the point that the accountant's objectivity is compromised. What happens? You work in some company. What happens is your company has some products. You just are employed in the organization, and the company said if someone bring clients, we will give bonus for them, or new clients come in, we will give them some commission. So okay, we work there, we promote them. You have a client who is a textile industry, and you ask to, this client is super, he is having good clothes, I recommend them. You recommended something, and actually the problem is your objective is to promote them. After promoting them, they after seeing the cloth, politics very poor, and your reputation is gone. So that is threat. Familiarity threat. Threat is due to a long course relationship with the client or an employing organization. The professional accountant will be too sympathetic to their interest or too accepting of their risks. The accountants auditors usually become family because every problem they will call you and you will solve them for any financial situation. They want loan, they will call you. Anything. So what happens? A part of time, if they even do some mistakes, as they are employing, you have a close relationship with your client. The professional account is too sympathetic because sympathy. Oh, okay, pathetic. Okay, believe it. Some kind of situation, and the interest of accepting whatever they do, you will solve it. Kind of thing will happen. That's familiarity threat. Intimidation threat. This threat that a professional accountant will be dared from acting objectively because the actual or perceiving pressures, including attempts to exercise undue influence over the accountant. You are doing an audit, something, and you are doing a roster audit. What happens is you found some frauds, or you have found the account is NPA, and you going to report it. The bank manager reported the loan accountant. The manager and that gundas are familiar. The manager said that, sir, your account is being monitored by the auditor. He is going to report as NPA. When if he report as NPA, we will come out and we will ask you to repay the money as soon as possible, or we will freeze your assets. The manager told to the bank. The manager, that gundas, whatever, next day he comes to our house and asks, if you report that matter, I will kill you, or I will do some harm to your family. Intimidation. So you should not report such thing to that. That has been said. How you treat. That the professional accountant will be deferred from acting objectively because the actual and perceived pressure. That is actual and then perceived pressure is there. That is an actual and perceived pressure is being built. So attempt to exercise under influence. You are under influence. If you are not doing it, we will hurt you. You are under influence. Okay, this happens. This is what the threats. Different type of threats. The following examples are the facts of circumstances with each of the categories threats might create threat to professional accountant when the undertaking a professional work. So each threat has been explained. You will see threats. Interesting points. Okay. Self-interest threat. The professional account have a direct financial interest to client. Direct financial interest, like I have invested in your company, or my father-in-law, mother invested in company. If I report it and your share price decrease, I have financial deficit or financial problem arise, so I am reporting it. It's like first problem. Professional accountants quoting a low fee to obtain new engagement, and the fee is low that might be difficult to perform the professional service in accordance with the applicable technical and professional standard of the place. In starting point of the auditor won't get some clients, though professional accountant may quote a low fees. So the low fees is to do the audit in correct time, but what may happen is he may need to perform higher services. Professional service need to perform is somewhat technical and professional standard. It's not as to the standard of the price you perform. That is your financial information, but you need to do it. So self-interest threat. You need to do that audit, but you will get fees. So he may say, I will give you huge fees. You do the audit. I will give more money. You sign that report. Such kind of intimation may come. Professional accountant have a close business relationship with the client. Maybe a relative, father-in-law, mother-in-law, and brother-in-law, sister-in-law. In this case, you need to do it. The professional accountant have access to confidential information that may be used for personal gain. This is a you are you are in a listed company audit, you are auditor, you know what is happening, and this company is going to launch a product that may be a huge hit and the whole market price is going to increase, and using that position as auditor you may purchase shares, and if you report that if you report that situation, price won't increase, but if you report it, so of a future benefit you take the audit and do some things. That is professional personal gain. The professional account discovers, or maybe you're going to report something, you have with this report the share price is going to fall, you have asked your friend to short the shares. So after your reporting and being listed, what happens, your friend is going to earn money, going to give a share up to you. So by this idea going to do something such a way. The professional accountants discovering significant error when evaluating the result of previous professional service performed by the member of accounting firm. Self-interest threats may also come through this. While doing audit, the previous auditor's error you found out. Yeah, you found a error of the member of a accounting firm. In an accounting firm, you found a error. That is also a threat.